The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I am having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a St. Patrick's Day, folks. Make it a great one. This quote is by, let's see, Vincent Barnett. Almost everything is more complicated than it seems, but almost nothing is hopeless. Market-wise, let's take a look at it out here. We had the Dow Industrials down 128, NASDAQ up 7, S&P's off 350. Gold contract down $5.50, trading at $1,147 an ounce. Silver down 8 cents at $15.53 an ounce. Platinum down 12 at $1,095 an ounce. Copper down 3 pennies at $2.64 a pound. Light sweet crude down $1.11, trading at $45.01. Bonds, we had the 10-year up 10 ticks, 127.17. 30-year up 1 point and 20 ticks at 161.17. And King Dollar down 16 ticks at 100.02. The euro up 21 at 105, and the yen trading up 4 at 121.38. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do we have? Okay. We're going to start with the SPY. We have the Fed meeting tomorrow at 2 o'clock. Janet Yellen will come out with a statement. What the market is looking at inside the statement is, will there or will there not be the patient word in there describing when they're going to go up with rates? You know, what has been in there for a long period of time. Rates haven't gone up since 2006. Bottom line, we'll see whether patient is removed from the statement. The market basically expects patient will be removed, but guess what? If, in fact, patient is removed, the market's going to take conniptions. SPY. What does the SPY do out here? This is what we have inside the SPY. SPY out here today did 89 million shares. What we had done yesterday was this. The SPY had done 136 million shares, got to a price point of 208.69. Today, now that 208.69 was going into the downdraft of 188 million. But what the SPY did have, folks, is that it had an expansion with volume yesterday. So this pushing in today, dramatically dropping off on volume, is basically saying the SPY is going to have a hard time getting over this 208.69 area. Or, said another way, it's going to have a very tough time getting into the downdraft that had been created out there on March 6th. March 6th, the SPY did 188 million shares. It went from a price point of 209.94 to 207. That's after making a high with on the 25th of February with 73 million. So you make a high with 73 million. You come off that high with 188 million. You come back into it yesterday with 36 million, and today you only did 90 million. That's saying the market doesn't have enough push to get into higher price. The NDX 100, we take a look at the 3 Qs. What do we have with the 3 Qs? Now, the 3 Qs had been the strongest on the way up. You know, the 3 Qs first broke out October 27th, consolidated for a bit, broke topside once again on February 12th. Then what you did with this, 3 Qs made a high on the 2nd of March. That high was for 22 million shares, came off that high with 30 million shares and 34 million shares. What we did yesterday is that you came into the downdraft with 25 million versus 30 million, versus 34 million. So you came in with 25 million yesterday versus 34 million. Right there, you're saying, okay, not enough juice. What did we do today? We did 19 million. So bottom line, that is also saying not enough juice. The SPY was the divergence out here yesterday. Small caps. Let's take a look at the small caps, because this is the number, man. This is a trip, too. This blows my mind, actually. You know, we were talking about, I'm doing Steve's shows in the morning, and we were talking about even the last hour. What wanted to be tested out here was the 123.77, which was the high that was generated on March 2nd. That high had 29 million shares. Guess what, folks? We went to 123.78. How the heck's that happen? Right? A penny. You closed at 123.73. The way this is set up, okay, so technically that's a failure. That's how that works, okay? What I expect you're going to see, however, is that this is going to push into this again, you know, because you're hanging right at these highs. The IWM would have to close under the low of last Thursday or Friday, which would be the 123.15. So I expect you know, it failed out here at the high, it double topped at the high, did all of that above. But what I expect you are going to see is that is going to try to get in there one more time. You'll probably get a failure, but that's what I expect you're going to see out of it. Okay, gold, the bonds and the currencies are going to be moving like crazy when this announcement is made, folks. What gold did out here today is this. They jammed gold into lower lows. It didn't hold. There were no sellers down below 1149. Gold's at 1147 right now. So how is there no sellers below 1149? You say, when we're 1147. Well, that's easy, because what happens is this. As they smoked gold down, what you had is that all the sell stops that were there, and by the way, there weren't a lot of them, got cleaned out. We only did 148,000 contracts in the gold contract. You closed out the session at, well, actually, they closed out the day session at 147.60. All you had to do was close above 146.50, because 146.50 was the low that was generated last Tuesday. Okay, so it tested the lows, rejected the lows, had lighter volume. Intraday, after it had rejected those lows, it was like a little rocket ship. What gold had done, in the matter of 10 minutes, it went from a price point of 1141 up to 1160, 1159. Then it made its way back all the way down into where it has signs of strength, and it did that with lighter volume. So gold basically needs wide price spread, accelerated volume. The gold equities, the silver equities, they also need it. It's showing that there's no sellers, but guess what? We don't have any buyers yet. Intraday, we definitely had a buyer inside the contract. And, you know, when you look at the price of gold being 1147, that's what it takes to get it out of the ground. More expensive than that, actually. You go try to buy a coin at 1147, you're not going to be able to get it. It's going to be $1,200 for an eagle, easy. For a maple leaf, it'd be $1,200. It'd be $1,200 right across the board. Bonds. Let's go look at bonds. Actually, no. Let's go look at silver next, because silver actually acted better than gold. So watch what silver did. And I like how gold acted, by the way, okay? Because they couldn't bust it down. Gold should have been down if the sell-out or something. Well, listen, when you're at lows like that, gold should have been down $40. Bottom line, didn't happen. We go look at the silver market. What do we have with silver? This is what happened with silver. Silver gets down to a price point today of $15.36. You do 33,000 contracts. Silver didn't even make it to its low. That's impressive. The low that was generated last Wednesday in silver was 15.26. We did 33,000 contracts. No, we did more than that last Thursday. 1 second. Yeah, we did 40,000 contracts last Thursday. We tested it today with 33,000. Rejected it. Silver saying it wants higher price. But as I said a little bit earlier, gold and silver both have to show us sign of strength, wide price spread. The TLT, 20-year plus bond fund, we'll use that for the bisecting and dissecting the bonds. This is what we have. The TLT is saying that, number one, it's in an ABC structure on the way down. We're at 129, and so the 129 got over and then closed under the swing point from 128. That's 128, isn't it? Okay, got over Thursday swing point. It's 129. That was 128.20. And, you know, bottom line is that does say you could go up to that swing point of 130.58. It looks weak, but the bottom line, that could get up and crawl its way up into that level. Oracle just come out with numbers. Oracle's been flying all over the place. Oracle closed at 42.87, was trading about 42. Now it's at 43.23. You stay right there, folks. Come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
As this one-of-a-kind winter comes to a close and spring approaches, it only seems fitting that now is the perfect time for a spring Tiger Dollar sale. For this week only, we're doubling the bonus that we give when you purchase any amount of Tiger Dollars. Normally, we offer a 10, 15, or 20% bonus when you purchase Tiger Dollars, but for this week only, we're doubling our special offers, and you can now get up to a 20, 30, or even up to a 40% bonus on your Tiger Dollar purchase. This is one of our best Tiger Dollar sales of the year and won't be around for long. Tiger Dollars can be used for any TFNN product or service and provide a great way to lock in added value on your subscriptions. Tiger Dollars never expire, so whether you're a current subscriber or plan on subscribing at one point in the future, take advantage of this spring Tiger Dollar sale this week only and get up to a 40% bonus on your Tiger Dollar purchase. This sale ends Sunday night, so don't miss out. All the details are on the front page of TFNN.com. Get your Tiger Dollars today and lock in your bonus before this sale passes you by.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And folks, as you're over to our webpage at TFNN, you're going to see our man, Mr. Dave White. He's going to be doing an outstanding workshop tomorrow. It's timely in a huge way. What the workshop is going to be on is learn how to trade option expiration, which is this Friday with our man, Mr. Dave White. That is a subscriber event, but you can subscribe for free right now. You're going to subscribe to the Path of Least Resistance. You do it for 1 month. Bottom line is that you'll get the newsletter for a month. You'll get the webinar free, which is tomorrow night. If you like the newsletter, great. You'll get charged the following month. You don't like it, you can just cancel it. Bottom line, you still get a month of the newsletter. You get the webinar. As you're over at TFNN, what you're going to see is this. You're going to see the Tiger Dollar sale. The sale started yesterday. It goes only till Sunday. If you buy any product at TFNN or you're looking to buy any product in the future, folks, this is a great deal. In fact, this is, I'm not sure when we've done it, we'll double the bonus. Normally, it's a 10, 20, or 30% bonus. The way this one works is that it's a 20, 30, and 40% bonus because we haven't done one of these, I think, in about 9 months. If you buy $500, you get $600 worth of Tiger dollars. You buy 1,000, you get 1,300. If you buy 1,500, you get 2,100. Tiger dollars are good on all products at TFNN, totally transferable, and have no expiration date. Now, when we talk about markets, and we talk about commodities, and we talk about the dollar, where we got to go? We got to go to our man, Mr. Andy Heck. Don't forget, folks, every Tuesday, Thursday, our man, Mr. Andy Heck, does an outstanding show, 5 to 6 Eastern Standard Time. As soon as I get off, he takes over. He's going to get you educated, keep you educated. Andy Heck, what's going on?
Patrick's Day.
Thanks so much, man. Yeah.
Mr.
And you know
O'Brien.
what? Hey, listen, these leprechauns got to do more work. The leprechauns are doing work this morning. They got gold up to 11.59, man, but then it didn't happen.
Let me ask you a question.
Yeah.
You know, down in Tampa, St. Pete, is it like it was in Boston and New York? Because it's not like that here in Vegas.
It's certainly not like Boston. Boston's a whole different animal. But it's
New
good.
York, too.
It's good. No, it's good. Everyone's got green on. I mean, the bars are loaded. It's good.
All right, that's good. That's
yeah, it is
Vegas,
good. I get my
Vegas
green
is kinda
water.
quiet.
I get my green water here somewhere. Yeah.
Okay, that's good. That's good.
Yeah.
All right, I'll have to go out a little later and see what the situation. Last year, no one really cared. New York, it's like one of the biggest holidays of the year.
Oh, it is the biggest holiday. I remember when I was a kid, St. Patrick's Day. We'd wait all year for St. Patrick's Day, man.
It's the biggest drinking holiday of the year.
Seriously, man. Oh, my God.
So, gold, man, I'll tell you, all of these commodities, they feel so heavy.
Yeah.
They feel so heavy here. Now, does that mean they're at the bottom end of the range and they're going to pop? I don't know. I just don't like the action across the board. The only thing that's up, appreciably today is natural gas.
Yeah, it's up 4%, but...
Yeah, no, I know. From where?
Yeah, exactly.
Right, exactly. But I'm looking around here. The grains are lower. All the metals are lower. I mean, platinum is disgusting.
Actually, natural gas looks pretty good. That's 93,000 contracts. I see. Yeah, I was looking at it a little bit earlier. No, see that?
Interesting day today.
No, that wants to go to $3 here at 287. Yeah.
I wrote an article for Seeking Alpha about natural gas this week, and I posted it in the Den.
Yes.
Most people say, the winter's over, natural gas got to go down now. 6 out of the last 10 years, spring and summer, natural gas prices actually went up. So there's no kind of rules here.
Right. No, I'm with you there for sure.
Yeah,
right.
Yeah. I mean, it's technically, I think it still wants to fill that gap between like 320 and 330.
No, listen, that makes sense. What I've seen is that, hey, listen, when there's no more sellers, we know what happens with the commodities. Then the buyers realize that, hey, there's no sellers. Well, let's stop buying.
Take it up.
Yeah,
Take
exactly.
It up. Take it up. That's and I heard you talking about oil. I'm going to be major contrarian here.
Yeah.
The oil structure continues to be the same. Term structure bearish, very bearish. Lots of inventories around. Brent spread bearish. Price action technical bearish. Products not bearish, bullish. So I think we're going to find a level above $40, and we're going to bounce back up to the top end of the range. And we're going to stop out everyone who's getting short into this thing.
Well, yeah, it's pretty. I mean, getting short at $45 when you just come down off 100, that's pretty intense, I guess.
And they are. They're all, getting. I haven't heard any bulls. When I hear absolutely no bulls, I say, "Ooh, this is going to be short covering in this market."
Yeah, but it's interesting though. Yeah, I'd take a shot at getting stopped out of 46, 47. I mean, I'm not short of oil right now, but I can see why someone would, because, you broke those lows today, and that's an ABC down, man. It's technically an ABC down, so.
I know it is, but remember one other thing. We're also rolling now. There's a lot of things going on in crude. You're rolling from April to May. Yeah. Which is important. And May is up around $45, and it's gonna come down, certainly, probably test some lows. But I think, the sentiment is too bearish for it to really dose. But we'll see. We'll see what happens.
So check this out, though. When inside, and you've been doing this much longer than I have, okay, particularly in the commodity market. When have you seen oil take a hit like this and not have more companies go out of business? That's gotta happen. No, do you know what I'm saying? And that hasn't happened yet. So that is going to be interesting. In fact, one of these companies, I got to pull this up. One of these companies, whoever just took over Forest Oil. This is a hit, folks, beyond belief. Someone had bought Forest Oil like 6 months ago. Huge deal. The bottom line, I was looking at the bonds yesterday, Andy. I could have bought bonds yesterday at 14 cents. They sold those bonds 5 months ago at 99 cents.
Oh, those are certainly the plays. The plays of the bonds, not the
14 cents. Yeah, and I was scared to buy them.
I know. Hey, you know what's got me thinking about oil here? There's one thing on the horizon that I think could give a real jolt to the market and stop out all the shorts in one day. I really believe that these talks with the Iranians are going to break down. I just don't see them coming to a conclusion that the U.S. can live with or a conclusion that the Iranians can live with. I think this is a stalemate. I think that the best case for these talks, if you're in favor of these talks, is that they get pushed out again. Now, if they break down, the Iranians always like to threaten things like the, blockades of the Straits of Hormuz, where 80% of the world's oil goes through each day. This is the kind of thing that could turn the oil market around. Not to get it to go back to, 70, 80 bucks, but to stop out every short position in the market. And I don't think that this is that far-fetched.
Listen, I absolutely don't think anything highly political or coming out of nowhere right now is far-fetched, because what's blowing my no seriously, we've talked about this. What's blowing my mind, folks, is that no one's paying attention to this. World is in a mess right now. I mean, you're talking about a major mess, okay? And it doesn't seem like anyone wants to give. So it's like, oh, really? And as no one wants to give, what ends up happening is that it just keeps getting worse. And, there's a lot of people not taking it seriously. So we're insulated here for a certain amount of time, okay? Can you stay with us a second?
Absolutely.
Awesome, man. Andy Heck, Tom O'Brien. Our phone number is 877-927-6648. Give us a call, folks. Want to hear what's going on in your world. And those leprechauns. We got to get these leprechauns going in this gold market, folks.
Ooh, I think they're sitting on it.
Sitting on it. Gonna be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And as one of the Tigers said, we're getting ready for Wacky Wednesday. That's going to be a beautiful thing, I'm telling you. And there's no doubt you got Janet Yellen. We get the Fed coming out tomorrow, 2 o'clock with the statement, 2:30 with the news briefing. And I guess, in the commodity market, that's going to move that around.
Definitely. Listen, it's very Shakespearean tomorrow. It's patience or no patience.
I know, man.
That is the question.
That is the question.
What is nobler, to raise rates or to leave them the same?
I like it. See, you're so talented. It's amazing.
I think tomorrow is a big day. This whole patience thing is it's so amazing to me. The bottom line is the dollar is really strong here. If they raise rates, the dollar's going to go, it's going to spike higher. There's no question. And commodities are going to be ugly. And I think gold's going to go through 1130 like a hot knife through butter.
Yeah,
if they do that. But I don't think they're going to do it.
Well, I'm glad you just brought this up, because what one of the Tigers had brought up, what I was saying earlier, folks, I did the program this morning, and I felt when they were basically running out the gold, the lows this morning, that's where the stops were, okay? So a question came up in the den. Well, do you think, Tom, that the stops can be under 1130? I don't think they can be. The reason being is that's when the whole thing got flushed the last time that we were down there. And they basically brought it down $7 or $8 from where we are now, and there was no selling. There's just nothing there, So
I think what you're going to see below 1130 is that people will stop into short positions.
Yeah,
and they might get caught. You know what I mean?
Yeah.
Right. I don't know if hedge funds are long a lot of gold here, and that's what you need to get that. However, the one thing that's really bothering me about the gold market, there's one thing.
Yeah.
When I look back at 2003, when the dollar was at the same levels, and hey, gold was a lot lower. Forget about where gold was, where silver was, where platinum was.
Sure.
But the gold-silver ratio was right around here, 72, 73, 74 to 1. All right? So silver was cheap relative to gold, and it was cheap because it went up a lot from 2003.
Okay.
But at the same time in 2003, platinum was a $260 premium to gold.
Right.
Right now, platinum is a $54 discount to gold. And that's why I think that gold is kind of overvalued right here, given everything going on. I'm getting very, that's a very strong signal to me. I love platinum long term, Tom. I think that it's very expensive to mine. It's a great industrial metal. It's a precious metal. But the action in platinum is not very good for the whole precious metal sector here.
Yeah, no,
it just means there's no investment demand.
There's no doubt. Okay, so what happens, folks, is Andy's saying there's no doubt. What happens is that getting the mineral out of the ore, the rock. So ore is just rock, folks. Okay, getting platinum out of rock, okay, is tough in an extraordinary way. There's no two ways about it. So there's less of it. It's used more as not only just the aspect of precious metals, as Andy just said. It's a huge industrial metal because it takes poison out. It's one of the best poison, basically, destructors in the universe.
Absolutely. Catalyst. It's a hardest metal. It's an amazing metal.
Right.
And there's only 250 tons produced each year.
Yeah.
You compare that to gold. Gold has about 2,800 tons. So it's more than 10 times rarer than gold. And the current state of the price versus gold is it's ugly. It's just ugly for the whole sector.
I agree, man. It's going to get interesting here. So when we're talking technomentos, which I love, okay, India is the largest buyer of gold.
Yes.
And China had overtaken them in 2012, 2013. India overtook China again in 2014 by a large amount, too, not a small amount. Now, what's going to get interesting here, folks, is this. If you know anything about the Indian culture, that is their wealth. Okay, and they're so smart, it's amazing, because over the course of years, you just keep accumulating. They don't know what the word sell is. And
right.
which is smart because the bottom line is that you're carrying it. They can't trust their currency. They can't trust their country because, you have a caste system that's insane, okay? But bottom line, they know what they're doing. And the gold market, I'd say they're probably some of the smartest people in the gold market, period. So what's happening now in India, now this has only started happening in India, and this is going to be really interesting to see how this shakes out. If you go on the web and you look at the pictures of their shops, they're extraordinary, right? Because it's just amazing. But what has happened is that a couple of the larger gold dealers now are selling online. And they didn't think it was going to fly. Well, it's flying beyond belief, okay? And what it's done is that it's making the market even bigger. And, we'll see how that whole thing shakes out.
Right, and gold is big in India, Tom, but silver is also very important and big there as well. And I just haven't seen, the demands, the premiums in silver, right now. Right now, it's, look.
Listen, I agree. It's dead. Listen, they're both dead in the water. I mean, I understand that. There's no doubt. We need buyers.
Hey, I'll tell you, maybe if it dips down and finds a level, then they come in like there's no tomorrow. I mean, that's very possible.
What I'm looking at in the gold market is that, as the CEO said, they can take it under the price of production, but the bottom line, how long is it going to stay there? So
that's exactly
and
that's exactly right.
What's encouraging to me today is that the futures market is a disconnect with physical gold. Like you can't go buy a coin at $11.50. Right. You just can't. $1,200, $12.10. I bet if you call up any place right now, it's probably $12.10 or $12.20 a coin.
It's always like that when we get down towards bottoms of ranges. The premiums do go up. And there's been a lot of action, a lot of interesting action, a lot of commodities today. For example, cocoa. Cocoa got sold down really hard this morning. Went down to 27, 26. Bounced close, very, very close to the highs of the day, just down about a couple of bucks here. So you're seeing a lot of stuff that's getting pushed down and bouncing back.
Ooh, I like the cocoa chart. Oh, interesting.
I like the cocoa chart here too. I think it's a dip to buy. It's been an interesting day. I think it all comes down to tomorrow. Everyone's waiting for little Janet to tell us what she's going to do, and she's probably not going to do anything.
I know.
We all wait, and then they're going to do nothing because this is very typical of the Fed.
Oh man.
It's funny. But one thing that's interesting about central banks is they do like to act when no one expects it. They do. So there is always that chance there that they might do something symbolic because they don't like to come out and like everyone's saying they're going to do it in June, right? 25 basis points, very symbolic.
If they ever did it tomorrow, it blows the minds. Oh my God.
Well, exactly. That's why I always central bank. Look at what the Swiss did.
I know.
In January.
Right.
They really like the element of surprise because when they have the elements of surprise. And they do this every once in a while. It keeps everyone on their toes. And you know what? It's been a long time since the Fed has surprised us. So
that's for sure.
I would say 10, maybe 15% chance tomorrow we get a surprise. It's possible.
Well, what's interesting is that Lagarde, folks, who is the head of the IMF, came out with a speech yesterday morning. I'm sure you saw that speech. She came out with that speech. She was in a bunch of third world countries, and she was telling them flat out, hey, you better be prepared because the volatility is going to be out here. And she wasn't naming our central bank, but she was saying these central banks are going to come out with some surprises, and it's going to roll your markets.
Absolutely going to happen, and she's right. Listen, this got to be a very strong woman. This woman's going to wind up being the referee in the ring between Greece and the rest of Europe.
Yeah.
She's got an important position there in the IMF, and maybe that was her way of giving a little bit of a wink and a nod there. I'll tell you, if they do even a symbolic raise tomorrow, it's going to be ugly across the board. Commodities, stocks, everything.
Yeah, no doubt.
So, hey, we'll wait and see.
It's a beautiful thing.
The answer is drink green beer tonight. That's the answer.
No doubt. That and a couple of Jamesons, right?
That's actually, I like that. Yeah, it was good in New York. I used to like the Irish whiskey in New York because it was always cold on St. Patty's Day. Here in Vegas, 75 degrees. It's not Jameson's weather for me.
Yeah, no, it's too hot at 75. No doubt about that. Well, listen, man, you have a great next 15 minutes because you're going to be out there growling and prowling with us in the next 15 minutes, and we appreciate the great education.
That's great. Thanks, Tom. Happy St. Patty's Day.
Okay, man. Have a great one. Have a safe one. And, what we do have approaching that, folks, it's going to be, I expect what you're going to see here tonight is a volatile session. It'll flatten out in the morning. The reason I'm saying that is that what was interesting out here today in Europe, folks, is that the DAX that had been going up forever came off the highs and came off those highs with some volume. I mean, the DAX has been just like the IBB. It's been a one-way trip. The DAX in January 6th, it was 9,300. Now it's 12,000, okay? That's an expansion with volume, no doubt. You stay right there, folks. We're going to be coming right back. We had the Dow Industrials finish down 128. NASDAQ up 7. S&P's down 3. Don't forget, folks, if you want to take advantage of Tiger Dolls, we just started the promotion yesterday. It goes from yesterday till Sunday night. You can get an extra bonus of 20, 30, or 40% right in the front page of TFNN. We'll come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. We take a look at Adobe. Adobe closed at $79.66. It's trading right now at $76.50. This is what you have on Adobe. Now, let's take a look at what she's saying. So the estimate on Adobe was 48 cents. They came in with 41 to 47 cents. That's going to be a second quarter adjusted revenue. The gross revenue, that's adjusted earnings per share. The estimate for gross revenue was $1.1 billion, and bottom line is that they're coming in over that. But bottom line is that the market right now is saying it doesn't care for that. If we do take a look at Adobe as the setup, what you're going to see is that it's not a bad-looking stock, really. You know, so we're down $3. It's going to go back into a high-volume swing point. It's going to be hard to break that baby down. You pushed higher today with volume. You pushed from 78 to 79, had some juice behind the move. It's getting some volume into it right now, but it's not that bad a setup. You know, we'll see how it handles that 76 level on the way down. If we do go over to the DAX, let's take a look at the DAX for a second. I want to show you this DAX because the DAX absolutely was a one-way move, and one-way move topside. And of course, this is a QE deal. No two ways about that. What ends up happening is that you know, free money basically you know, basically pushes things around. What's going to be intriguing here, and this is where there's also there can be a backfire in this whole deal, is that if in fact U.S. investors look and say, hey, why am I going to stay in the U.S. when interest rates are going up versus go to Europe when interest rates are going down? You know, how am I going to take advantage of that? Well, if this was like 5 or 6 years ago, it would have been a lot harder to take advantage of that and not lose the currency conversion. Because if you lost the currency conversion, let's say you take U.S. dollars, put them into euros, invest in Europe, bottom line is that if the dollar continued higher, and the equities in Europe went higher, when you had to convert it back to the U.S. dollar, you might lose money. Now, that being said, there are ETF structures that will buy the biggest stocks in Europe, and they're fully hedged. That's a different animal. So there's all these different little trades that can be done out there if, in fact, that's the case. Now, U.S. investment advisors are scared beyond belief that that is what's going to happen, okay? I heard an interview yesterday. It was an absolutely incredible interview because what had happened is that, first off, they were, the financial advisor saying, yeah, well, Europe's a good place to be. And then the next question around, well, if it's such a good place to be, why don't we just sell the U.S. equities and just go into European equities? Well, bottom line, that would hit the U.S. broker-dealer community in an extraordinary way. So you saw the flip around. I was driving in my car when this interview was taking place, and it was cool because as soon as I heard the question, I says, "Oh, watch this. This is going to be fast, furious, and it's going to be answered no. You can't do that. You can't do that. The money's got to stay in the account here. It can't go over to Europe." Bottom line, that's what it was. But anyway, to go back to the DAX for a second. So what do we have in the DAX? Well, the DAX, straight line, in fact, so 8,300 to 12,000. So it's up 30% in 5 months. We'll see how this operates tomorrow morning. It looks like the DAX, 11,081. You could get a pullback there. I don't have the volume on how it come off this high this morning, but it looks like I came off the high with some juice behind it. Because if you pull up a couple of the individual equities inside the DAX, that's the way that they were shaken. You got Daimler Chrysler was the leader on the way down out here today, and that just had monster volume. Okay, we had made a high yesterday with 4.8 million. It comes off that high today with 6.9 million. So Daimler looks like it wants to run into this $80 level. You're at 91 right now. We take a look at the second one. This is pretty interesting, actually. So the second one off the high, that was, I can't pronounce this name, but this is, I gotta get up in my German. Let's see if this one come off the high. This come off the high with volume too. So this is it's TKA. That had made a high yesterday with 1.9 million, comes down today with 2.7. So your probability looks that these things came off the high with some real juice. KNS came down 9.85. Look at every one of these are at highs too. This is pretty amazing. This one didn't come off the high with volume. The fourth one, CON, that's Continental AG. That wasn't bad. But the two leading ones came off that high and came off that high with vicious volume on the way down. So what are you going to be looking for tomorrow morning? Okay, what you have is this. The bond and the dollar are the number right now. And the correlation is really close. The Fed is going to come out with the announcement to 2 o'clock. At 2:30, there's going to be a press conference. And the question is the patient going to be in there or not in there? Or are they really going to put a shock into the marketplace? As Andy said, there was a very small chance of that. And they just turn around and say, hey, listen, we're going up 25 basis points or 0.1% or some other. That's going to be, that would be insanity if that's what happens, meaning in the marketplace. I think it's going to be volatile enough just when the patient is going to come out. My take is that the patient is going to come out, because if the patient doesn't come out right now, what you have is this, is that the Fed, we all not only joke, but we think that they don't have the guts to do anything, because each and every time what has happened in the marketplace in the last really 15 years is this, is that if the market pulls back, just the stock market, never mind about the economy, I'm talking about the stock market. If the market pulls back, the Fed is scrambling. Oh, the market can't pull back, market can't pull back. That isn't why the Federal Reserve was put in place, folks, okay? The bottom line, the Federal Reserve was not put in place to keep the stock market higher. But that is what's happened. And each and every time that there's any type of a pullback, it's like it's the end of the world. Well, it's the end of the world. The end of the world's never going to come. So, what do we have? Are there going to be pullbacks? Yeah. Have they been put off for a huge amount of time right now? Yes. What does that mean when they pull off a huge amount of time? That means that when it happens, they're faster, they're larger, they're more vicious. You get a starving animal, what happens? Hey, happy St. Patrick's Day, folks. You folks stay right there. We got our Tiger, Andy Heck, coming up to growl and prowl with you. Have a great night, have a safe night, and have a safe night. Don't drink and drive. Get in that cab. Have a great one, folks.